us know when we're not feeling 100%, but it often takes a qualified health professional to properly read the signs and establish whether there really is a problem. If only it were that easy for businesses. Or is it? People who run businesses need to be able to make their own financial health check just to make sure that everything's running as it should be. Now, happily, you don't have to spend 7 years at medical school to do this. In fact, I'm here to meet my very own spreadsheet surgeon in the form of Paul Smith, who's going to talk me through the vital signs. Hi, Paul.
Hi, Mike.
Good to see you.
And you.
As an expert, what are the most important financial measures for a business?
Sure. Fairly obvious, I guess, from my perspective. Sales is quite critical in terms of what you've achieved in the month, but also the order book going forward across the next 3 to 6 months. Cash is critical. If you haven't got your cash right, you'll only run out of cash once. If you can't pay your suppliers, can't pay your wages, then you've got a major problem. Margin. So if you're selling products, what margin are you getting with each customer that you're dealing with? Quite important, because there's no point selling it at a loss or a very low margin. Overheads need to keep control on costs, and all too often it's very easy to let that kind of slip away or not be monitored.
So a lot of those are the key indicators that a business must have a handle on.
Yeah, absolutely. Cash, I think, is the critical one. And behind the cash, you look at items such as your stock. How much stock are you holding? Is that increasing, decreasing? Is it obsolete? There's no point having cash tied up in stock. Your creditors, make sure that you pay them on time, build good relationships with them, because at some point in time you may need to ask them for some more credit, but build a good relationship. Managing your debtor book's critical. A customer who doesn't pay or doesn't pay on time is not a good customer. So that's very, very important as well. So those three components of stock, debtors and creditors all very much impact on your cash position.
Can you tell me the benefits then of regularly checking your business's financial health?
Yeah, absolutely. It's critical that you do that at least annually, and not just internally. Benchmark yourself against your competitors. There's financial information available from them from Companies House. See what margins they're achieving. See what markets they're going to. See what turnover growth they're managing to achieve. So it's not just about an internal check, it's also an external one as well.
So management accounts, how often should they be produced and why?
I would say monthly, quarterly, in certain cases, but I would actually say monthly. Why? You don't want to be in a situation where the only time that you find out how the business is performing is when the annual accounts are produced, and that can be sort of like 6 to 9 months after the year end. So management accounts on a monthly basis enable you to monitor how the business is performing and take the necessary steps to make adjustments wherever necessary to make sure that you do hit your financial plan and your business plan. So it's absolutely critical. I'd also add on the financial accounts, if you're sharing them with your bank, provide some covering information. Don't ask the bank to just interpret the information. Send in a 1-page or a 2-pager, just explaining what the key highlights are in the numbers. So put your interpretation on it rather than expecting them to do that.
Knowing your financial position is really important, especially from a lender's perspective. Banks are becoming increasingly vigilant in setting and monitoring financial covenants and reviewing management accounts. So it's very important this information is accurate, reliable and up to date. Here's an example of how good financial healthcare has benefited Northwest businesses.
Well, as a small owner-managed company, when we set up the business, there were just 2 of us. It was kind of a case of fitting in our financial measures and our accounting process in between actually getting the jobs done for clients, and often doing that kind of work and even sending out the invoices was a bit of an afterthought and almost something that got in the way of doing the work itself. But obviously that's no basis to run a business. And it was a case of using all our available resources, my wife, my father, and getting them to quickly learn how to use Sage and QuickBooks to do our accounting for us. It's been essential as we've gone from being a 2-man operation to a 22-man operation over the last 7 years, and we're now turning over in the region of £1.2 million. You clearly can't afford to have a business that runs blind without complete access to management information about your business performance, and indeed a full-time resource to cope with that. Clearly just the sheer amount of bookkeeping that's required, be that processing invoices in and invoices out, through to salary and payroll issues, other taxation matters. That's a full-time job. Just to do that role within a business is vital and could be the difference between you surviving or going under. Having someone that is completely focused on getting that money in, I think, would be my best piece of advice. It's probably the best piece of investment you could make. You know, if you're spending £20,000 on a full-time finance person, I guarantee it will save you £20,000 of legal fees, sleepless nights and bank debts. And really it's, as I say, it's more than just looking at the numbers, and it's looking behind the numbers and trying to identify what story those numbers tell you, because often you can think you're doing well and you have a gut feel that based on the amount of money you're invoicing every month that the business is doing well. Well, in reality it may not be, and it's about really drilling down with that available resource in-house to see, I guess, where you're performing well, where you're performing badly, and really putting all elements of your business performance under the microscope.